Why Bitcoin should be rising just because the money print, I think, is just stupid. Bitcoin is a very, very risk-related asset, which will decline when NASDAQ and the stock market starts to decline. And the stock market is now in a very big bubble. Bitcoin has never seen a real recession. If you don't see it right now, I mean, seriously, then macro is not your thing. Bitcoin will come to a massive top. And if it drops below, which I think it can, 10,000 easily, I claim it'll drop more than 95% into the next crisis. The dollar is going to rise a lot into 26. We are heading into one of the worst recessions we have seen since the 1930s. We are in the final phase of a economy boom, giving us a year and a half maximum. The water is coming in on the Titanic.
Archie.
You offered an insight there about the link between Bitcoin, its price, and liquidity. Can you elaborate on that?
Well, there's been a lot of charts on X where people have been trying to tie up M2 with the price of Bitcoin, and they just go 2 or 3 years back and then kind of kept it within that. And of course, you always have to analyze everything and understand and go into that. So I do that every time I see something. I try to understand what is it that people are looking at. And if you just took it out a little longer, you could see that doesn't really add up. And it was more people confuse correlation with causality. And that is really the problem with that kind of chart that we have seen. So people try to say, okay, Bitcoin only has 21 million units that will ever be printed, and that's it. And that means that it's a shortage, and then hence it's going to go to the moon. I mean, there's plenty of things in this world that will only be a certain amount of. I mean, right? So it's this about that and then you say, because there is a structure to it. Yeah, but as I understand the technology of it, the Bitcoin structure is not even as strong as in some of the other structures. We have the ledgers so I think the whole foundation or the whole argumentation on this, why Bitcoin should be rising just because the money print, we see the debasement, I think is just strange, weird, stupid to a certain degree.
So you see the breakdown in that correlation as proving it was a spurious assertion to begin with?
Yeah, first of all, if you look to history, again, you can go back to 2001 and you can go back to 2007 also and look at the M2, which people were doing, and then say, how did risk assets perform even though M2 was going up? And you could see that into 2001, 2003, you saw that M2 was rising. The central banks were, trying to stimulate the economy. What did we see? We saw an 85% decline. It was 80% decline in the NASDAQ, which was a risky tech-oriented kind of sector. But people say, but this is different now because it's Bitcoin. If you look to the correlation between NASDAQ and Bitcoin, it's like so crazy. It's like, ice being sold in the sun, right? It's just going together. And you see that Bitcoin, every time NASDAQ has been declining, you see Bitcoin actually also having a bigger decline. So I think you're looking at an asset here which has been rising because of the technologies that we now see and that the hype we have around that, and obviously also to a degree where the money debasement or the money printing has brought out the effect that I talked about, where yields have been suppressed, and you see that a lot of investment, and that brings about the whole bubble that we have right now, as I see we have. So I think it's of course there is a certain level to it, but it's not like because they print money, Bitcoin will go up, because you can easily have the situation like you had into the financial crisis where they were printing money, as you and I just talked about earlier, and you saw the NASDAQ and the S&P kept declining, in that time frame. If it was like that, why wouldn't we see that they have been rising? So people say there's a difference between NASDAQ and Bitcoin. I don't think there is. I think Bitcoin is a very, very risk-related asset, which will decline when NASDAQ and the stock market starts to decline. And that's why I don't think the correlation has been there for some time. The causality is incorrect. That is what people, they like to jump to easy conclusions. But the real conclusion is that actually more, you have something that is highly correlated to the stock market. And the stock market is now, because of the money printing, in a very big bubble. And that's why you're going to see also these curious projects which have zero yield per year, actually delivering something which is, tremendous returns. And on top of that, you have the human psychology. And when you bake that all together, you get these fantastic moves. So I think we have and technically it looks like Bitcoin will come to a massive top. And if it drops below, which I think it can, 10,000 easily. I mean, we just dropped from 125,000 to 95,000, below 90,000 even, right?
It's just under 90,000 right now.
Right. If we see that due to nothing, why wouldn't we think if, we saw a strong dollar rise, a recession, a liquidity crunch, Bitcoin actually crashing much below that? I think it's very, very likely. And that's why I think people have been jumping onto the narrative train and keep pumping each other. And the Michael Saylor of the world is talking about faith, or if you trust enough in it. I mean, this is the kind of narrative you will see into all sorts of big bubbles.
You just said that Bitcoin's pulled back from, was it 125, 126 to now just under 90 as we speak. I think it's gone down at more than $1,000 since we started this interview.
Mm-hmm.
Over nothing. Now, when you say over nothing, do you mean over nothing major in a macro sense, or nothing at all in Bitcoin to be able to explain that?
I mean, if something drops by, what is it? 35%. Mm-hmm. Due to what? Because we didn't see liquidity in the system because of the U.S. shutdown, potentially because of that, and we don't even see it in equities. I mean, what would it?
Equities have pulled back though, but much less,
4 or 5%,
right?
In that same front, yeah. So it's like really nothing. And actually, if that is only recently, if you look to it when Bitcoin started out, it's a decline. It's much more. It actually, I'm not even sure that the equities have been declining that much. But anyway, let's say it's just that. Why would we think that when we hit one of the largest potentially crises we could see, where we have a deflationary development, where the stock price could start to sharply decline, and dollar, as I see it, will rise. That's not mainstream. I know that. I think the dollar is going to rise a lot into 26. Why would we think Bitcoin will all of a sudden just rise like, the best thing in the world, and we'll just see that it's just rallying? Bitcoin is a liquidity dependent tool, and yes, but it will also be dependent on whether there will be people buying it. And what we see is that if only a few of the big ones goes in and start to cash out or sell their Bitcoins, you'll see that Bitcoin can take a tumble and it pulls down the rest of the crypto market with it. So I just don't see the stability in it. And if something can drop which I claim it will, I claim it'll drop more than 95% into the next crisis. And if it does that, what is it really that we're talking about? We're talking about something that is extremely volatile, that everybody thinks is going to be the savior of the world, the financial world, but has these extreme drawdowns. Again, I need to be proven right, but it's 90% is something we have seen. It dropped more than 73%, 75% over 4 times, right? So we're 90% into one of the worst crises when we have a real recession, which Bitcoin has never seen a real recession. If that happens, then, you don't need to be that kind of creative in your mind to think that Bitcoin can drop quite a lot, and that's the problem.
That's a lot to break down. I'm going to hopefully try to remember all my questions, because it was a very rich statement and quite a lot to unpick there.
Mm-hmm.
So you're talking about a potential 90% drawdown from a top of what? How high?
Yeah, that's it. I don't think we're at the top just yet. And I think we're going to see that we see the 150,000 in Bitcoin over the next few months here. I think it's going to go more or less straight up.
Oh, you think that's still on the cards, that we're going? Yeah. This is just a pit stop on the way towards 150 plus.
I have a 30% chance that it stops at a lower high, and I have a 70% situation or probability on that we see it actually rising very, very strong to 150,000 within within a month or two. I think we normally see into it seems like a lot, but it's not. If you look into the situation of in 2017, if you look into 21 into the top there, Bitcoin actually twice into the top of 2021 rose by more than 100% in 4 weeks. 100% in 4 weeks, 120%, and then it dropped a little, and then it rallied another 105% in 4 weeks in 21. And in 2017, it rose by 115% in 3 weeks. So people telling me you cannot see 60%, 70, 80%, let's say that's 83% in 4 weeks, I say you can. And you probably will, because I'm expecting it to be a very large top. So I think you're going to see this rally just being extreme. And also because I think you're seeing the equities indices around the world starting to put in large tops. Look at Nikkei, doesn't look good. Look at the DAX, doesn't look good. Hang Seng, so on and so forth. They all are coming to something that, to me at least, looks like very large tops. And if that's the case, you may have 3, 4, 5, 6 weeks more of the fun in the S&P and the Nasdaq, which, by the way, I see the S&P go to around 7,800. Will we then how fast can we then see Bitcoin rising? And with TGA now coming out and the liquidity starting to flow again, I think that is the driver of this next move up, because the economy itself is slowing. There are so many indications of that. If you don't see it right now, I mean, seriously, then macro is not your thing. I mean, you can look at everything from large truck sales. You can look at the ADP numbers. You can look at the duration of long-term unemployment. You can look to everything. Excuse me. So there are so many indications that the economy is slowing right here. And that's why I'm saying we're probably in that final dance now. It's getting close to 12 o'clock, and there is one more dance. And I think that is going to be the one that brings everybody now that is so bearish. And we are now here on the November 19th, so bearish, onto the other side of the fence. And then when I start to say, okay, I think this is the top, then everybody will be calling me crazy, because everybody can see that's been going up with 100 or 80% in 4 weeks. So how could it top here? That is just a normal sentiment. And I was bullish in April, and I was calling everybody out on Twitter saying, this is not the top. I was calling it out in 22 and in 23 when I was, especially in 22. So I've been bullish since 22 continuously, and I've called all these declines, but this is different. We're now seeing the business cycle that I've developed is topping out, and the leading indicators are just, plunging, and we are now to see the coincidence. And there's funny thing here, that the U.S. administration don't want to show the unemployment numbers for October, as I've heard, and we kind of see that they're a little sluggish on getting them out. My model was predicting before, when Powell was saying the economy is strong at the beginning of this year, and I was just looking, my leading indicators start to decline, and when we see a crossover of a certain equilibrium, it's normally giving us a year and a half maximum. And I thought, okay, we need to start seeing it in the economy. And you saw the job numbers were 144,000, 240,000 I think it was in April, May. And I was like, what is this? And then came August, and you saw the big revisions. And all of a sudden we had negative numbers in those months, right? Going from something that is an economy that is just thriving and accelerating to something that is a standstill. Now, my model has been declining for such a long time that we should see more declines in these coincident indicators, which are the one that goes with the economy. So I think you're going to see that the numbers are really bad. And I think the reason they don't want to show the October numbers is one simple reason, and that's because they're bad. And if that's the case, then you are not in an economy that is recovering. Then you can have the difference between what I call the liquiditists, which are normally bankers, who think that that's a great thing, because when you start to see the liquidity cycle go up, because that's when the Fed comes in and saves the world. The problem is, if you go back and check that, they have never done that. They have never, ever done that. They've always missed the boat or the whatever. So you're going to see this uptick in liquidity. And immediately now, when we see it potentially here and the Fed comes out and say, hey, we're going to cut in December, I think you're going to see that move strongly higher as well, also driven by that. But unfortunately, I think it's going to be the last one, because that's the moment the real economy starts to take over. And 62% of the Americans right now live paycheck to paycheck. 15%, 16% have very hard to put enough food on the table. This is based on the very new analysis or surveys. So we are not in a situation where the economy is great. We see the consumer confidence is just plunging, and people can't, the affordability is down in the gutter, as we talked about earlier. Why would we see a pickup of the economy here? I don't think we are. I think we are heading into one of the worst recessions we have seen since the 1930s.
You think the impetus for Bitcoin to bounce up from where it is right now and the markets in general, would be the Fed signaling in late November, early December?
One of the things. There's never just one thing. But I think, first of all, the structures that I look at are simply not done. That's one thing. People don't understand that. But there is something about structure psychology. So this is the psychology where we bring people onto the wrong side of the fence, and then you see the final surge where everybody will be in. Simply, too many people have caught the right top this time, if this is the case. That is one of the things. That's a psychological perspective, argument, indication. But I think the TGA that comes out now, all the money, the taxes and so on that has been, standing idle at the Treasury right now will now start to flow back into the system. My leading indicators have been showing that we have a deterioration which started already in last year, in 24, and normally that gives us a year and a half in terms of warning before we start to see the rollover of the coincident, which is the real economy. That was why I didn't understand the strong numbers in early of this year from the non-farm payrolls, which are surveys, and Powell was so secure and say on the strong job numbers, talking about this strong labor market, and his colleagues around the world were actually surprised to see how strong the economy of the U.S. Economy was. So that was just weird to me to see that in March and April and so on, we had these numbers at 144, 240 something, which is a very strong economy. And then all of a sudden we had August, and we saw these big job revisions, which is actually bringing the way the Fed at least should look at the economy closer to what I think is the reality of the economy, which is that you have a slowing economy. So, and you can then say, my model is predicting that we have a further slowdown and it's going to end in a recession, because it's never been wrong. If every time you have a leading crossover of what I call the equilibrium line, then you will have a recession at some point. Going back to 1950s, not too many signals, not too few. Meaning we are in the final phase of a economy boom, which now potentially is going to roll over. We are already seeing a lot of signs on that around the world in various indices. And I think you're going to see that the economy in the US will come to the same. Does it mean that we cannot have this, strong rally that I'm suggesting? I think it actually is pointing out that we're going to get it, because that is the final, gasp of the economy and of the market, when they hear that the Fed is going to support the economy, is maybe being a little less hawkish. But we don't even need that, because right now we have all the taxes and, everything that's been standing still as the economy has been shut down is now starting to recirculate. And you have it like $1 trillion standing, which now will be over the next 4 weeks is going to be re-enter the economy. And I think that is going to be the final surge of things. And that's why I think there is a good basis for saying that I think Bitcoin can rally from the current levels to the 150,000. As I said, it's 70% potentially that we could see that kind of 75, maybe even seeing that kind of move, and a little less 25 that we only see up to around 120 again before we see another decline. I just can't make it up like that, because if we look at the thing like the DAX, the Dow Jones was what I was trying to say, and we saw that has actually been putting in a new high last week. It would be strange to see that the Dow Jones should be outperforming both the Nasdaq and so on, and also Bitcoin. That's not the way that the sequencing of things work. So I think we're seeing the final decline now, this final correction before we have a final push higher. It's a wave 5 for all Elliott wave lovers. And that is going to bring everybody into the market and saying, oh, we now all forgotten about what we talked about on November 19th, because everything is now fine. The Fed is there and the economy is strong, and AI, because that's the narrative. And then you'll see that the market tops out, because the real economy, Mrs. Johnson, Mrs. Jensen, whatever they're called, are suffering. And we can see that. And that is the real deal of the economy. And the problem is you have a lot of people thinking liquidity would drive things. It may seem like that for a short time, but come the real economy starts to roll over and you see unemployment moving up, you're going to have a market crash.
You think the gravity of the contracting economy will pull markets down eventually, or do you think it will happen step by step, hand in hand with the actual economy contracting?
I think you will see that that also due to the private credit situation we have, that there will be some kind of, we'll call it a black swan. It's not a black swan because we can almost expect it to happen. You have a lot of consumers that are really feeling bad, and you can see credit card delinquencies going up and so on. And we expect that nothing will happen from that. And the Fed is actually almost dismissing that when he was asked 6 months ago, what about the consumers that are not feeling so great? And he's like, yeah, it's something tariffs he's talking about. Ridiculous. It's not about that. It's because they can't afford to sit in their homes, and they will try to make ends meet. And if you look at the number of people actually also working more jobs, 2-3 jobs, that has been rising as well. So you are in a situation where the real deal of the economy, which is the bottom 75% of the population, is struggling. The water is coming in on the Titanic. The third-class passengers are seeing the water coming in and feeling they're getting wet feet. You're seeing the first-class passengers are talking about what kind of gin and tonic or whiskey they should have next, because they just don't see the problem yet. And that is the situation, because the real deal is about the economy. And this is where we have a schism actually right now, where I'm standing for the business cycle, which is the real economy, where you can see it's labor, the participation rate, it's real people getting a job and not getting a job. And then you have people saying the credit cycle will save everything, because when the Fed comes in, everything will be saved. I don't see that. And I think that is the big schism that is going to be, at least the judge or the jury will come back in and tell us which one is right when we get to 1 or 2 years down the road.